All right, everyone, exciting news now. Apparently, if you are an investor and a lot of your holdings are in crypto, you can use that crypto now to get a mortgage. Or can you? Let's find out. As you know, I'm Jonathan Alfonso. I'm a real estate attorney and real estate broker in Miami, Florida. And in this channel, we cover all things real estate. And in today's video, I want to talk to you about this company, actually in my own backyard in Miami, Florida, located in Brickell, that is offering mortgages to those who hold crypto. Milo Credit has announced through various press releases that they are offering crypto mortgages. So obviously, like everyone else, I got curious and I went over to their website to get a little bit more because a press release left me, asking a lot of questions. As you can see here, you go on the website and you click and you can't get much information because they say you can join a waitlist. So I joined the waitlist because I have clients with crypto that are asking questions, that are trying to understand. A product like this would be very appealing. So the first thing I noticed when I joined their waitlist is I'm number 6,490, which, listen, at least one positive indicator out of all of this is, let's assume there's 6,490 people at, let's say, an average loan of $1 million. There is a potential market here of, let's say, only half of those are very serious. There's still a $3 billion loan volume market for crypto mortgages, which is pretty healthy. A lot of people are obviously interested in this product. The next thing I noticed when I joined their waitlist is they seem to be applying the SoFi model, where they're kind of trying to gamify the entire loan process. For those of you that are not familiar, SoFi is another new platform that offers a bunch of different loan products. And what they try to do is game, if you apply, you get points. If you refer people, you get points. As you get points, you can get certain rewards, etc. So here, Milo Credit is telling me, listen, you've gotten 5 points. If you refer someone, we'll give you 10 points. My big issue at this point is, who the hell is Milo Credit? So all we can do is, get the information on their website, and I'll let you research. Apparently, they're, trying to revolutionize a bunch of things in the banking space, but that's the whole point of crypto. Crypto, DeFi, they're all trying to do this. What I want to know is, are they really going to simplify the process? So let's dig a little further. If you scroll down, you'll see it says, how will this work? So as you scroll down, it says you apply online. All right, great. Anybody can do that nowadays. Next. The next thing they say is select initial rate and payment. This is great. I really wish on their website they would have a little more information. What kind of rates are we talking here? Now, the reason I bring this up is, and this is kind of goes into the whole precursor, is crypto is a new way of transacting, all right? Without getting into, a long, convoluted explanation of everything crypto related. But one thing that I see is people that have a lot of crypto are outside the traditional banking system. For me, when I start to look at these mortgages and what Milo Credit is trying to do, I look at it in the same way as, for example, when foreign nationals were moving into the United States. I mean, they're always moving into, but like, for example, in Miami, it's a constant problem where we'll get like waves of people moving to this country. And since they're not in the traditional US banking system, then, you would have certain banks that would do loans to foreign nationals. Now, what ends up happening is, what you have to understand is, when banks lend money, typically they like to create a bunch of loans that all look the same, that have the same terms, because what they want to do is, once they get 1,000 loans that look the same, they like to sell them off to a secondary market. Now, typically that's why you have Fannie, Freddie, and you have like conventional loans, because those are easily bought by, for example, even the federal government these days. But when you get into these different types of loans, what ends up happening is there's not a lot of appetite, so typically the lender is going to have to hold them. That's why, for example, in Miami, this would be a common problem where we would have waves because, for example, foreign nationals would come in, they would come in with money, but a lot of them wanted to also be able to finance, and there would be a lender, there will be a local bank for a while that would make loans. Then, once they made about 100 million in loans, they would start to say, well, wait a second, we've put out too many loans like this, let's scale back and let's stop. And the reason I bring this up is this is something similar that I think Milo Credit is going to go through where, listen, as we can see, I'm number 6,490. Let's say they have the numbers that I say, even if they do $3 billion in loans, that's a lot of money that Milo Credit is going to have to lend out on the streets, all right, by, putting these loans out there, and they're going to be holding this paper. So I have to imagine they don't want to lend that much at this point. And what the real reason there's this whole wait list going on is Milo Credit is trying to figure out, is anybody out there going to want to buy these loans off of Milo Credit? And they're trying to figure out the programs. That's why, they're doing the press release and getting all this buzz. But you're not going to get a lot of clarity on the rate and terms because Milo Credit has to figure out, is anybody going to buy this? And what does that look like and with the projections? And when you factor in everything going on in the market these days, where the market has been very volatile in January of 2022, if you are out there and you're counting on Milo Credit, I think you're going to have to wait a while because I'm sure it's going to take them a bit. Their next point and how this works is they say, close your loan. We deal with all the boring stuff, appraisal, title, insurance. Well, what exactly does this mean? Are they going to pick your insurance company for you? Because that's something you're going to want to do. If Milo Credit picks it for you, how do you know they're going to get you the best insurance? They could, it's the same as like, for example, when banks do forced place insurance. Nobody wants that because a policy you could get, let's say for $10,000, the bank charges you $30,000 because they go to the most expensive provider. So I have a little issue as to how is this going to work, the appraisals, because at the end of the day, they're going to need to get an appraisal on the property done. So, I want to see this in action before I'm going to believe this. I think we see a lot of these tech companies, they come out and they want to revolutionize. So for example, in the home space, let's look at the latest, one, which was a failure, Zillow Home Loans, right? Zillow had the estimate, Zillow had the website, Zillow had the traction. They couldn't figure out how to automate it because there's a lot of steps in this transaction. So I'm going to want to see a little bit more from Milo Credit on this. And their last point is you can, make your payments in fiat or in crypto. I would assume that any company that's, willing to look at your crypto is going to allow you to pay in crypto. I don't think this is that much of a game changer, but it is going to go to their servicing and how this works because that only leads me to believe more and more that Milo is going to have to hold on to these loans because how many servicing companies out there actually accept crypto at this point? Remember, one big thing that happens in the loan world is banks, not only do they sell loans, they also sell the rights to service them where they, certain companies want the right to be able to collect the payments every month and manage all of the payment system on behalf of the actual investors that own the loan. So that's a big market. So it's going to be interesting to see how Milo does this. The last section on their website I wanted to cover is they have a section called benefits of having a crypto mortgage and they list various benefits. So let's go through some of these. They state that crypto wealth qualifies you, not your FICO score, etc. So to me, what they're doing is equivalent to what happens in the wealth management space, right? Typically, you will have, for affluent individuals, they will have private client services. They will have wealth managers where, they don't do typical loan products because what they want is a relationship with the individual that has a lot of money. So they're willing to, do catered loans. The problem that I see with Milo Credit is Milo is not a massive institution that I'm aware of that has billions of dollars that it is managing. So how exactly are they going to do all of this? They're going to have to fine tune it because in my opinion, they're probably looking for somebody to buy these loans down the road. And they're, how is this all going to work? So I'm very curious how they are going to qualify you just on your crypto wealth. Their next claim is low bank interest rates, no hard money rates. But what does that really look like, right? Because a lot of people will make these kind of claims, but are the rates, for example, you right now, at the time that you're watching this video, rates right now are in the low 3s. Hard money rates are, 7% and up. Is Milo going to charge 4%, 5% in today's rate environment? So I really would have liked to have seen what I see from many lenders that do these alternative products, which is, some sort of at least, range of what the interest rates are going to look like. Their next claim is finance 100% of the purchase, right? Now, this seems very appealing and all, but the other thing too is what they're saying is that you have to transfer their crypto, which leads me to another question. For those of you that are in the crypto space, right? Are you going to have to transfer the crypto from your wallet to their wallet? Are you going to have to put it in some sort of third-party custodian account? What does that look like? Because yes, you get to finance 100% of the home purchase, but if you really think about it, all right, you actually are at a 50% loan to value at the time of making the loan, right? Because let's say $1 million loan amount. If you got to put $1 million of crypto with Milo Credit and you got to put, and then now your $1 million house is leveraged, right? You have $2 million of assets, all right, and $1 million. So, this is something to consider. Which leads me to my next point, right? Milo Credit says income taxes are not triggered. This is true because since you did not sell any crypto to enter into this transaction, all right, you have no income taxes. But I think, and this leads me to my very key thought on this entire, Milo Credit mortgage, which is, I think if you're an investor and you're considering this product, I think the important thing for you is going to be, right, if you can still qualify for a conventional loan product and the rates are still somewhat better than Milo Credit, does it make more sense for you to sell the amount of crypto to get your 20% down payment, let's say, as opposed to going the Milo route where you're going to have your $1 million of crypto and the asset encumbered, because you're going to be stuck in that situation where you're basically encumbering twice the amount of value. You're really at a 50% loan to value when you think about it at the end of the day. Because, for example, let's say you have $1 million in crypto, right? If you sold 20% of that, right? Then let's say 200K to get your down payment. If you think about it that way, and let's say you paid your taxes, if you paid your taxes to the government, and let's say you're at the highest tax bracket, that's 37%. 37% of 200,000, okay, you're looking at a $74,000 tax bill. But if your interest rate with a conventional lender is less, and you are still controlling your 800K in crypto, and you're able to make at least, let's say, a 7 to 8% return on that money by trading it, it may be more beneficial to you. So is it more beneficial to you to hold the 800K in crypto and continue to trade that and make moves with it and get a conventional loan product? Or does it make sense for you to take the Milo Credit mortgage and have your assets turned down? Which really leads me to my last point, which is their last benefit is, you know, you can add or withdraw crypto and you can move around your interest rate. We really have no idea of what they mean by any of this. And truthfully speaking, having dealt with many lenders and having represented lenders and dealt with that, when you start moving the interest rate on a whim like that, that's going to become very difficult and very difficult to service. So I question how they're going to be implementing this on the daily. What I'm gathering, and you know, this is my overall review and this is my overall thought process on this new crypto mortgage, is we got a lot of hubbub and we got a press release, and apparently they are doing some mortgages, but from what I'm looking out there, it seems like I haven't seen any of the crypto mortgages actually get financed and actually get finalized. I think what we're seeing is if Milo can deliver on this promise and Milo can start doing it, I think this is just going to only make sense for that individual who has a lot of assets in crypto, has not been declaring a lot of income, you know, their taxes are very low, and they would not qualify for any other mortgage. And this is your only option, then listen, you had no options before, so at least you have one with the Milo Credit mortgage. But I think given that most people that have crypto have, you know, a sizable amount of assets, I think for most of them, if they have other income sources that they can prove, I think it's just going to make more sense for you to sell it and take the tax hit. And ultimately, you're just going to have to plug this into an Excel spreadsheet and determine, you know, my carrying cost of leaving my crypto being held by Milo versus me just taking a one-time hit for the 20% down payment. Which one makes more sense? And if I were you, I would do that math and I would consider that. But listen, I'm looking forward to more info from Milo. And if you have any questions, if you've seen any crypto mortgages, if you know of anyone that's done it, please leave me comments below, because I'd be very curious to hear your experience or the experience of those around you. Till next time.